Alright, so welcome back. Welcome to the practical aspect of this segment. So, if you have been wondering why your strategy is not working or it working for a particular time and then it stop working, so please pay attention to this. It's about your strategy, it's about your trading edge, right? So, you don't want to miss this. You want to stay to the end of this video. Do it to destroy the subscribe button, you scatter the like button, and then you pay attentive attention to what we're about to discuss. So let me just a brief recap. So what is backtesting? It's a fundamental practice in trading that involves applying a trading strategy to historical market data to assess its potential effectiveness. This process allows traders to evaluate how a strategy would have performed in the past, providing insight that can inform future trading decisions. Alright, so as a trader, make sure before you apply any strategy you have learned into real life trading, into managing your own funds life, make sure you have backtested the strategy and you have systematized the approach in such a way that you have it laid down as rules. That is that is how you take trading very serious, even as a business, right? So this is one of the aspects of that. It helps you. Well, if you are done with this, then you are sure of a good trading plan. So pay attention to this. This is a practical segment of this course. So let me just go through over again. Why do we backtest? We backtest to validate our strategy for strategy effectiveness. We backtest to enhance confidence in trading. Enhance confidence not in yourself, but confidence in your system, in your trading edge. Because if you're having confidence in yourself, it will end up making you to be greedy, right? But then if you follow your plan, your trading plan, you can you can navigate the system well as you're supposed to. So as well, it helps us identify weakness in that particular strategy, because a strategy is an edge. An edge is an advantage in the market. So now an edge already is a strength. So now that's why you don't see identify strength and weakness, because the edge already is a strength. So now we are identifying weakness in that particular edge. So backtesting helps you identify that weakness and also help you improve risk management, support data driven decision. So just in case you want to get more explanation on this, there's a link somewhere or there's a video, so you can check that video on the theoretical part of this course and then gain more insight. All right, so we're going into the practical segment of this course now. So first of all, okay, before you backtest, you need to have these tools in place. You need to have a trading view, you need to have a Google Docs, or whatever, a doc, a WPS document. Just create a kind of journal or a notepad, your pen, your notebook, or anyone is okay. So after having that, what do you need to do? As a trader, you must have learned on a particular strategy, or maybe you have watched my videos and you have seen me use some kind of strategies, and maybe you are trying to implement that in your trading. What do you do next? You need to put the strategy into perspective like this, right? So using this as example, because this is what I will use for this example. So now looking at this now, you see we have setup confirmation, we have all of this, we have entry conditions, we have SL and TP, we have maximum trade per week 3, we have stick, okay. So and then we have a trading journal to journal all our trade. So mind you, this is the purpose for all of this, is to identify the win rate, the average risk to reward, and the age, the consistency of this age that the strategy brings, right? Yeah, so this is what we are trying to figure out. So first of all, we know our age. What is our age? This is our age. It's our set of rules we apply to the market. This is our age. So what do we do again? We need to know which pair are we doing this backtesting on. So I will just, for the purpose of this, I will consider Euro USD, right? Yes, I'm considering Euro USD. So considering Euro USD, this is a system. What do we have to do again? Go to our trading view, right? So now this is trading view. So we come back. This is what we'll make a reference to this. So first of all, we identify key supply or demand zones on higher time frame like 1 hour, 4 hours. So come in here. So okay, I okay. So first of all, we have an edge. We identify the particular asset, so euro USD, and what are we going to do again? We'll pick a historical data range. We start replaying trade. So now coming back to this point, so let me say I'm starting from the month of January. Yes, early January, because this is a kind of swing trade. It's not a kind of it's not scalping. Okay, this is November, December. All right, so this is January. All right, so let me just mark this with a vertical line. So this is January, guys. All right, so please pay attention. This is a technical aspect of this course. All right, so what is the strategy? It's a breakout and retest. It's a supply and demand strategy. You can see it from here. So now we are applying it. So, and what again do we need to get set? We need to get as well our we need to get our journal ready. So we need to get our journal ready. So okay, so now starting from here. So first, what we want to see, we want to identify a zone. We want to identify a zone, a supply or demand zone from 1 hour or 4 hours. So let's say for the purpose of this, let's use 1 hour. So January, November, December. Okay, so this is January. So this strategy tells me that I am a demand and supply trader. So let's say this was the first week of January, right? So the week begin with on a Tuesday. So this is a Tuesday. So let's say for this first week I was just observing the market. So now what happened? I saw this breakout. Does this look like breakout? I need your feedback. So let's check if this looks like breakout. So I can use this. Okay, let me use this. So now that this was a kind of resistance. See, this was a resistance. This was a zone. Take note. So what happened? Price broke through this, right? And remember, price range in this particular zone, and then it broke through this. So if you're breaking this is a breakout. So I'm just observing. This was a Tuesday, Thursday, Wednesday. So me looking at this, what will I do? So looking at this again, this is a 1 hour time frame. So demand and supply. So what is demand? This is supply. This is demand is always, when they say a demand of the currency is high, that means the buying pressure is high. So a demand zone is a buying zone, and a supply zone is a selling zone when market to tap before it sell. A demand zone when market to tap before it to buy. So take note of that. And I mark my demand zone as okay. So let's do an example of demand and supply. So let's say we got this range and then market breakout. So this is my demand zone. So the last candle before the impulse, the last candle before an imbalance. So this is my demand zone. Why? Because this zone, there was much market activities in this zone. Market was just consolidating, accumulating orders, and then suddenly there was a breakout from this zone. So there was a breakout from this zone, right? So that means this place that was broken out was this is a kind of key level, right? Because let's say the institutional players, they starting their orders from here, and boom, market drop to this point. So that means I'll still protect this level, or this level is a good discounted level that people will be willing to buy from. Sorry, that people will be willing to sell from, right? So this is an order block because orders are stacked in here. So when we get a retest into this zone, we expect a drop. So this is my trading. This is a supply zone. If we flip this Now if we flip this because of time, if I flip this in scale, so you can see this is my demand zone as well. So tapped, okay, a breakout, this zone, the whole of this zone now is my demand zone. When market tap on this, I will now wait for my confirmation, like that engulfing or rejection, all of them that like you saw here. Now this is my entry confirmation. Wait for pullback into the zone. So now this is a breakout from this zone. Wait for pullback into the zone. And what are we waiting for again? We're waiting for candle confirmation. So pin bar, inside bar, engulfing. But after all of this, I want to see engulfing, because it's engulfing that will trigger me in. So engulfing, I'm taking my trade. My SL will be above this zone, and then I'm targeting another, either a supply zone or maybe a liquidity point where I know that price is likely going to raid. All right, so hope you got this clear. This is for demand and this is supply. So we apply this system in this. If we do not see something like that, then we are not trading, we are just waiting. So now what do we see? First of all, we see this accumulation at this point, and the market broke out this low, and this was a good resistance point, right? This is a good resistance point. So what do we see now? We see that okay, market is bearish. So after this now, we wait for correction. So there's what we call correction, there's what we call retracement, there's what we call reversal. So now pay attention to this now. It's not because I'm looking at this chart. So look, this was a high, it was broken here, this was a low, okay, this was a low, sorry, it was broken, a low was broken. So now if we look at this, we want to measure the degree of retracement. So if I should put my fib tool at this high and my extend it to this low, so you can see my zones. You can see the 0, you can see the, okay, 38, you can see the 50 retracement, and then you can see the, okay, let me put this so that you see this now. And then you can see what, you can see the 88 to 78% retracement. So take note, please take note. So what is this now? This 88 is my supply zone. I use this like this is my best supply zone. If I just use this fib, see this range from this 78 upwards, I'm comfortable selling a trade here. If I'm selling, right, yes, if I'm selling, I'm comfortable selling a trade here. Why? Because this is a good supply zone. It is always, at that, will I call it, sniper entry. It gives you a kind of good risk to reward, right? Yes. So this, from this zone, I'll be watching at this trade at this zone, because this is a leg of breakout, right? Okay, so I can do the same here at this point now. So you saw this big momentum candle. I can do the same now. Put this fib 2 here. So let's just do for the purpose of this now. So which high are you seeing now? You can say, okay, market accumulated in this point and then it broke out. So okay, let me say, that this, okay, let me just use from this candle high and low. So from this candle high and low, so this is 78% and this is 88%. So you see, market never came into my zone, so I would not have taken this trade, period. So this one interests me now. So I'll just mark this, and I'll just be allowing price to do the correction back up. Then I will now be observing. Alright, so now price came into this zone, and you can see now. So first of all, I have marked this zone, that this is my zone of interest. So what will I do again? I can see that this is an imbalance. It was not filled well. So I'm not talking about refining zones now. So just stay with me and just stay with me. So this was my zone. All of this was my zone. That's 78 using the flip tool. So now I have two entry models. I have a risk entry and a confirmation entry. So looking at this now, let's say this was, let me, okay, I'll do an example for the two scenarios. So now looking at this now, you saw market was driving back up slowly. So assuming I took a risk entry, so you saw this now, I'll put it at this middle. And you know why I'll put it there? Because this is a liquidity. So this is a kind of, market to use this as a kind of inducement. Hope you know what inducement is now. So this is a kind of inducement. So after this, he came back, but then he rode off already. So but then the bigger picture, you want to still drive down. So I'll use this at the middle because of this liquidity, and then maybe if I'm selling, my SL will be above, just above here a little bit. Yeah. So and then my tip will be to this leg. I'm not that greedy to take it to the next swing. So now you can see now what happened. Market came boom to this point. My SL was here, and then it came down. You can see that there's pressure on this point. So what is that's why I say this is an order block. It's a supply zone. The supply here was much. I can tell you that there are passive sell orders here. This is what I mean by passive sell orders. If your order is active already, that order I can say is leaving because it is active. Maybe there are people buying this market, the order is leaving. So people are buying this market, and it now came to this zone. It now met a huge passive orders. Why? Because this is an order block. So he rejected. You can see the rejection, and then he spike up again. Okay, rejected up again. See, you see this rejection candle, and then but maybe I'm in this trade. Boom. So let's just say, okay. So how long did it took this price to play? Okay. So this was, okay, I can use this measure now to put it from here after it was activated to this one. So this is backtesting now we are talking about. So now this is what? This is 4 days. So that means, okay, let me see, this was on Monday. See, this was on Monday, and then this was on Friday. So this is like a 1 week trade, and then this is what? Return of 1:6 instead of 1:3. You see that it makes sense. So when you see opportunity to catch a full leg, please don't hesitate to catch it, because you not always see a kind of good range like this, but when you see it, you catch it. You can see all of this, they are piled up of liquidity. Market, you just know that market is come back because of this range. All right, so after this now, boom to this point. So this is my risk entry. So this one is risk entry. You can do this one, and maybe market came here, and maybe this momentum now, this buy momentum will just come right into your SL, and then you're out. There's nothing you can do about it. But now notice market came to this point and reacted, and still came back again and reacted. So this is my second entry. I have a second entry called a confirmation entry. So this is my confirmation entry. After, I will just wait for market to come into this zone without any passive order. So coming to this, I will just watch for reaction. So after market came into this zone, what happened? Market rejected. So I will now go to the lower time frame. So notice this is not the premium version of this trading view, so that is why I cannot navigate to the lower time frame like the 50 minutes. But if you notice now, when you saw this now, you see all of this consolidation. So at this point now, there will be some kind of candlestick reaction here. So what I would have noticed is that market would have broke structure within this candle. Now market would have broke structure, and then when market broke structure, I will now mark another supply zone up here instead. So this is another supply zone, this red candle. So after this red candle now, so what will I do? I know that, okay, this is the candle for my confirmation entry. So what will I do? Instead of this one now, this one was a risk entry, so I'll use this one now as my confirmation entry. Then I'll wait for this pullback. So after this, I'll now put my entry at this middle. Now this one will give me good risk to reward. Then put my SL at the tip of this candle. Remember how we put it in this other one, at the tip, you see, and then we are still extending it to this low. And then what happened? This is 8 arrow, 8.2. This is 6. So this one is even giving us 8% return. We risk 1%, we are making 8%. There's no gaming about this now. We risk maybe in a $10,000 account, you risk 1%, you're making $800, and it makes sense. Even passive profit account. All right, so this is our first trade. So the purpose of this is backtesting. We want to just see the effectiveness of the strategy, right? The focus. All right, so now we'll come back to this. We'll come back to our journal, and then what are we going to put? We'll put, okay, maybe trade one. Then we'll put the date. the date was, so you can forget about this year if you know that if you are testing it in 2025 to just make it easier. So now you see, now what are you saying? You're seeing Monday, 6 Monday. So you can just come and put, like you have this in your head already. So maybe at the top of this might be January, testing for January to April, or maybe just testing January. So now this will be January. Okay, this, you don't need to put January, you just need to put 6. What is this? 6 January. So date range 6 January. So now if you put 6 January now, how many days? This was from 6 January to 9 January. So you can just put 6 January to 9 January per Euro USD. So maybe if you just put Euro USD, you don't need to change this. You just need to put one. So you put the screenshot in your, this now is my, I'm just doing an example. So, and as well the entry price. So how do you get the entry price? How do you get the exit price? How do you get the take profit, the risk to reward? And then obviously you know that it win or it did not win. So now let's just use this one for a case study, this risk entry. So now we delete this one. So for the purpose of this, we will not use confirmation entry, let's just use risk entry. All right, so this was 6 arrow, okay, 6.39 arrow. So I'll just simply put 6.3 arrow. So I'll come here and put 1 is to 6.3. 1 is to 6.3. Did he win? He win. So now my entry, my SL, my TP point, I'll come here, I will double tap on this. So what do I say? I see entry price. I'll copy this price now and put entry price. Take profit price, copy it, put. You can see stop level now is my SL. Copy this and put, right, and put, and then boom, I'm done with it. Then I'll just note indicate. So I can just indicate that okay, it was a long retracement, because this retracement you will not even expect the market to retrace to this point. But then you can look this zone as a supply zone. You know why you not look this zone? Because okay, see this, it was a kind of small supply zone. You saw as price rejected this zone. But you know why I will not look this zone? And this was the zone that broke out, because I can see an imbalance fully. Like I will not. This makes sense for a kind of inducement. So if I see this as an inducement, so that means I'll pay attention to this part. And the FIB even gave us that confirmation that this zone was the zone of interest. So now it was good we took this trade here. So now you have seen how I've gotten the risk to reward and the entry and the exit price and everything. All right. So this is for trade one. So now this was when the trade hit TP. So from here now, we'll be looking, our trade hit TP. Wow, we are happy. So now we'll be looking for another trade, right? Yes. So and then we want to know. So there's what they call top down analysis. Top down analysis is you doing your analysis from the higher time frame. But now let's just be limited with the 1 hour time frame. So looking at this 1 hour time frame now. Okay, this is Monday again. Okay, just observing the market. So seeing these zones. Okay, so now this is a kind of, me now as a trader, this is a kind of head and shoulder pattern. So in my higher time frame, this will indicate a kind of reversal. Please pay attention. This will indicate a kind of reversal, and this maybe in the higher time frame will be showing a kind of support. So and this is a kind of reversal pattern because of this now. But okay, let's say okay, this is how I'll spot it out. This head and shoulder, and it makes sense because this head and shoulder, it was even above this to tell you that there is momentum, there is good momentum. So this does not interest me. So what interests me now? So this is what interests me. I'm looking at the highs, looking at the other internal zone. So this highs now, I've marked this. So maybe I can just mark this again. So you can see that now what happened? This zone, this high now you retested from this zone. So that means if this market want to sell, please pay attention. So we can say that this was a breakout, a retest. So why is it that we are not waiting for a kind of retest to this zone to sell again? You need to know that you need to go with the higher picture. So maybe if this price has come to a good support, and you are seeing an indication, maybe from the higher time frame that market want to buy, you definitely want to align with the bigger picture, right? So that is the purpose for all of this. So now you are seeing this head and shoulder pattern, head, shoulder. So what do you see again? You see that, okay, here is internal zone, then here is a kind of neckline. Okay, head and shoulder. Here is a kind of overall kind of, is it neckline or shoulder line? So what happened now from this point? I first of all saw this breakout, but then this consolidation is telling me that there is indecision here at this point. So I just need to wait. So what happened? I now saw this run through. So what does it indicate for me? This indicates a breakout. Pay attention. Indicate a breakout. Why? Because if all of this zone, sef I should mark all of this zone, what happened? This candle is a good momentum. So from our system, what does our system say? Our system say wait for price to break out of a range structure near that zone. um this structures now, see the zone, market broke out. So this is what I'm saying, market broke out. Okay, so what will I do now? I'll just go and mark my supply and demand zone. So now what happened? This was the zone that consolidated to break out. So this is what, this is my supply zone, sorry, this is my demand zone. In this case now we are buying, this is my demand zone. You get the point, because this is where market accumulated to buy. But pay attention now, pay attention, please pay attention. So now looking at this now, I'm looking at this leg, this is imbalance, and I can connect this line like this now. This price action for you, for us, this price action. So me connecting this line, I can say that this is a level, this is a level. So somehow in my mind, this now, I'm not expecting this to just hold price to just go up, right? I'm not expecting this to hold price to just go up. Because of what? Because of this other, this other kind of support. You can see this support. So this now, after market broke out, and this is a kind of imbalance, so I can mark this zone instead. Pay attention. So I can mark this zone instead. This zone now, all of this consolidate. See this last candle before this impulse. I can mark this zone from the body, not the wick. So if I mark this zone like this, extend it to the future. So in any way market come to this point now. So this is my interest. So now what am I doing? I said we have a risk entry. So if you're using risk entry, what will I do? I'll just simply put my risk entry. I can put it in this middle, right? So you can see if I put it in this middle, that means this trade. So where will I put my SL? I'll simply put my SL at this low, because this is the zone that interests me. So I'll just put it a little above it. Then where am I targeting again? So now looking at this now, seeing this place, it might be a supply zone. I might take note. Where do we put our TP so that it will not be as if? So our TP minimum 1:3 first. So let's see whether this makes sense. This even 7. Oh my god. So this 7. So what do you say? Adjust based on zone size and space ahead. So now based on zone, I can just see, okay, maybe because this was a momentum came in. So I would not like to put my TP above here. This is even giving me more than 1:3. So maybe I'll put it at this last candle here. I'm putting this for a reason. Oh, I can put it here, but I put it here because it will always happen. And then this is even 8 arrow already. So now what happened now? If you notice now, market came down with this risk entry, but market did not activate us. So these are part of the things you will learn in your backtesting. These are part of the things you are going to learn in your backtesting, right? Yes, these are part of the things you are going to learn. So what do you learn from this trade now? So now maybe I use this entry model and it did not activate me, and it came back again, it did not activate me. It came back, it did not activate, it came back. So what will I do? I'll just calm down, and that means there is no trade. So maybe this trade now, I can journal it, put all my prices, put all my stuff, 7 arrow. journal it. So after journaling it, then I will now put no activation. Then I'll now say, okay, retest was not successful. Retest was not successful. Just a few pips to retest. So this is what now, this is information. It is giving me information that okay, what what good way now will I have taken this trade? But you will not just judge this trade individually. So we have kept this record. So this is the second trade we took. We have kept this record. So this is one way that would have taken this trade. Our entry above this zone, okay, just here we would have taken the trade, but let's just say okay, this already we have 8 arrow, 8%, okay, 6% profit. So we move again, we move forward. So now looking at this zone I was talking about for a supply zone, you see the market will react from here. See, market react from here, market react from here, and it sold to a little bit. So now if you were looking at this now, you now saw this market coming back up to this point, what would you have thought? You would have thought that okay, this zone is getting weak because this is a zone according to price action. See, this is just one part of this. You need to do top down analysis for you to come and look for this kind of setup, right? So this is a zone for me. See, this is a resistance zone for me that another price will react. So see, it reacted from here, it reacted from here. So me, I know that market will react from this point. So what do I need to do? I can just wait for breakout from this zone, but I will not likely sell this market from this zone. See, now you saw the market from here, good. You want to come and sell it from here. It might not make sense, but I just know that there will be some reaction. So, and it happened. So just take note of this. So now this did not activate also. We are still watching this market. So now you saw this now. This was a breakout of these zones. This makes sense now. This makes sense. But okay, I would have told you how I would have entered this trade using confirmation entry, but let's leave this. Let's just focus on what we are doing. So now looking at this now, this is a breakout, right? This is a breakout of this zone, but then it has reached this confluence zone. So what will you do as market reaches this confluence zone? You just observe, just observe, just wait for. Okay, so let me look. Okay, this zone, the market just consolidated at this zone. So now I'll be looking at this now. See, pay attention now. This is a zone. So if I mark the zone off from here, first what are we looking for? We're looking for breakout. So let's look and see where there's breakout. So where do you spot breakout? Spot breakout at this point. I have spot breakout already because for me to look at this chart now to see this, okay, it drove down and then now see this. So in this time frame now, this is what? This is a small internal breakout. Right, this is a breakout from this zone. Why? Because this is a kind of, I don't know. Okay, get me. Okay, let me do something. So see now, this is a support. So it is climbing up gradually. So if I mark this from this zone again, this is what, this is support, and this is what now this is, so this is a lower time frame, but you see this price action is still holding. It's a support, see support. This is also a support. So me seeing the price is bouncing from here, I thought that market want to rally up to some point, right? And it makes sense. So from this point, seeing this now, I've saw this momentum. So what will I do now? Breakout. Where is which zone? Which zone now broke out? So I will now mark what? I will now mark my supplies. Okay, my demand zone, because this is buying now. Mark my, so all of this zone that was consolidating. See, this is my demand zone. So I can mark this like this now. So all of this. So what happened now? Market came back. See, market retested this zone, but market did not come to this my zone. So what happened in this one? I'm ignoring this trade just in case I wanted to take this trade. Maybe at this middle, my SL, I'll take my I'll put my SL here, expecting this second one because this was a kind of stop loss hunt. Let me put it that way. Yes. So I know that price will not come to this point. Rather, this one might weak into it. So now I will target the zone that's clear to me. So this zone makes sense because this zone is almost like a supply zone. Then, but then 1:3. So you see this zone now. For me, okay, this 4 arrow. So where is this connected to? So that's connected to this one, because all of this zone now market will react from it, because this is also a resistance. Yes, so another market will react from here. So now this is how I would have taken this trade. But now what happened? Market came into this zone and it did not activate me. So no activation, no activation. So what have we done? We have done now no activation, no activation. Only one trade successful. So let's check now. This is Monday, this is January. And now this is January 25th. So please, this is what I want you to know. Please note this, or note this. You want to be interested in quality and not quantity. You're not just trying to just catch every move, but then you have a system. You're working according to your system. That is what separates this. That's what separate professional, good, successful traders and the rest. You are not just gambling your way into trading, but you are using your system and you are applying your system, right? Yes, that is what will make you successful in the long run. That's what will make you successful, and this is the system we are applying. Another person might have another kind of strategy, maybe like a kind of trend line strategy. Okay, you can see it from here like this now. Okay, let me delete this, because I'm seeing another thing from here like this now. So another person might have his trend line strategy breakout, is waiting for retest maybe at this fair value gap, and is taking the trade. Me, I'm not seeing that. I'm just applying only this system, and this is the criteria, this is the laws, right? This is the law. So now I will delete this. This is not what I'm not trend line. This is not trend line strategy. This is just this strategy. So now what happened? Market did not come to this point. So I'll delete my order, because market has come up to this point. So now we'll look in the future now. So now this is a resistance zone. This zone makes sense rather than this one. This one is just a kind of small zone. The market has tried and defeated this one, and then it has come out to another obstacle. This zone now I can mark it like this, because it's a good zone. See all of this zone now. Mark it like this. Market will range in this zone. So market came to this point now. So pay attention. So this trade was not activated. I delete it sharp, right? I delete it. So now what are we doing again? So this zone, market came to this zone first. It reacted down. So what will I see? What am I seeing? I'm seeing that, okay, the sellers, okay, the first of all, what you see here, the buyers have closed their profit and the sellers are beginning to take over the market. So that's why you see that this low was broken. Then this low was broken. I don't want to just rush and maybe use this supply zone and just sell the trade, because this market was just buying. Rather, I want to wait for some kind of confirmation. So after market ran through to this point, if I want to take this setup, what will I be watching at? I will now see this, I will now mark this and keep. I'll be waiting for breakout confirmation, right? So you see, boom, market broke out from this zone, and it makes sense, right? It makes sense. This is what I'm looking for. This is the momentum I'm looking for. So now, what will I do again? Bam, mark my zone. This, from this point now, I'm ignoring this point. This is stop loss hunt, a liquidity sweep. So this is my zone that consolidated. So I'll mark this zone and I'll wait for market to come to this zone. So now if you notice now what type of market accumulated, it broke structure again. So maybe somebody else might look at this point for entry, but I won't look at this point for entry. Why? Because of this imbalance. I'm not looking for this point for entry because of this imbalance. Yes, that's what I would do. This is what I would do. So maybe if I use my fib to mark at this high, where is the low? Okay, maybe this is the low. So looking for this my level 80. This is a kind of extreme. You see, this is a kind of greedy trade, but yes, it gives me a high risk to reward. So look at this now. This is my zone for entry. If I want to sell, we use my risk entry. Boom. But then I notice that market did not activate me. But then it has tapped this fair value gap. So what am I doing? This trade, I'm not taking this trade. But then if I use the confirmation entry, this is my internal, I can call this breakout. So this zone now that broke out, this is a supply zone. So if I have used this one so that Market activated me very nicely. So this one now, I'll just put it somewhere here. I'll not put it up high here because I don't need to put it. I'll just put it somewhere here like this. Why? Because I know what I'm doing. Because this has read through, and this. So I hope you get the point. So now, when we like target, you need to know what you are doing. So now, looking at this now, I can see that this is a support, right? This zone is a support zone. You can see that this is another level. This head and shoulder. So can see multiple target zone. So I'm not seeing this price, I'm not seeing this reaction. So see this, all of this liquidity, another market to definitely come to this point because of, see, 1 2 3 lows, it will come to this point. When we are talking about liquidity equal lows, maybe I will use this for an example. So but you see this head and shoulder where price react, I know that because market will react at this zone. Me, I'll put my TP here at this zone. Why? Because this is a head and shoulder pattern. This is a support. This is a support zone now, and it was broken. So after this liquidity, when market will rate to this liquidity, at least let it close me at this point. So this is what now? This is 6 to the one. So this trade now would have played out almost 7 arrow, 7% return. You risk 1%, you make 7%. It made sense. But now if we have used this risk entry, market never activated us, right? And market did not activate us. So what we have done? Nothing. But then still in our risk entry, not confirmation entry, we might just look at this again. So let's say we look at this. So these are these lows. This me, I'll start from here to mark my lows. I want to see that it cut across some good points. So these lows now. Looking at this, so I know like this is not a breakout. For me, this is not a breakout. For me now, this point now, you see, not a good breakout. Then you saw this is a breakout, but you can see that this is market gap. So all of this now, this is a breakout. So this is Friday. So I will not even enter this trade because it's Friday. So maybe I'll just wait. So after this now, I'm seeing that market have changed structure down. So maybe from this, I'll be expecting that, okay, let market continue the downward trend. Yes, this is what I'll be thinking. So after this now, market broke out from this zone. What are you thinking now? If you look at this chart, I'm looking at this consolidating zone. This zone now is my zone of interest. This is my supply zone. So market should come to this point, it captures my interest. So market came to this point, all of these points now. Because, okay, let me use the 50 so that you see this now. So this is the high, not this high, because this high is with this supply zone. This high nice is the high of reference. So this high and this low. So what am I looking for? 78%. So 78%. If I just go ahead and put my risk entry here, delete this. So I know that this is a resistance zone. Okay, to respect here. So now I'll put my entry here at this zone. And I can put my entry at the middle. Then my stop loss at this point. Yeah. So what happened? Market kicked us. It kicked us. There's nothing we can do about that. They'll put our this one. I will target this low because I know that if market should hold from here, it should come to this low. I will target this low. So what happened now? First of all, market kicked us. Boom. If this was a risk entry or market kicked us, but if this was a confirmation entry, would have entered around this point. Around this point, it's just see engulfing. It's just very sweet. It's sniper entry. You just enter your trade and maybe your SL above somewhere, and then boom, you can write it down to this point. But then this was a loss trade. This was a loss trade. So since this was a loss trade now, this is what -1%. So we are testing this strategy. We are back testing. Take note. So now this was for this day. So push that one again. So this was done. So I'll now see this. Market failed to break this. So I know that, okay, what is market trying to do now? Is it trying to do another thing fishy? Is it trying to go up? But I will wait now. Observe. So now this is what? This is a high. Makes sense that market broke this high. But then I'm still looking at this one again. Market now broke this high. You get the point? So market broke this high now. It captures my interest because this breakout is a good momentum. It's telling me that this candle, this red candle, is my order block. Yes, now this red candle is my order block. So I can mark this like this. It's not like it's the red candle, but the red candle, you see, this retest, the red candle, it captures my interest right here. So this is my order block. So now I'll now wait for retest at the zone, maybe at the middle, put my SL here, and then I'll look at the future. So maybe this point now, this zone that was not, this zone that was neglected, see this zone now, I might be afraid of it, so I'll put my TP here, this 3.5. So what happened now? Market did not activate us again. Market flew up. So what do? Another trade not activated. So this is how you test now. So why are we doing this? What have you observed? You have noticed that now we can now think in probabilities that, okay, in this strategy, it's like it is always good for us to use confirmation entry, because ever since it's only this one that we use trace entry that went well. This one, confirmation entry, it would have taken this trade full time. This one, confirmation entry, would have taken this trade full time. Okay, let me tell you what would have done. So me seeing this now is okay. Let me tell you this. This red candle, if I want to use confirmation entry, I'm looking for something to break this high with good momentum, and I'm not seeing rejection. I see this red candle. I'm still waiting. Then you see this candle momentum, but then it has not given me what I want. So see this point now. You see this candle. This candle now engulf above all of this candle, and it has given me good pattern. So what will I do if I'm using confirmation entry? I can take this trade at this point, boom, put my SA at this low, either this one or this one, but I can just put it here like this. Then I target this point of interest. So this is 3.999. You see with 4 arrow. So confirmation entry worked, right? So these are my two entry approach. This was just a risk entry, right? Yes. So I hope you are gaining value. Just give your reaction at the comment section. Alright, so this one now, no entry. So we are still looking for our setup. So now we are noticing that market has come into the zone. There should be just some reaction. So let's know if we can venture in this reaction. First, now we look at this. This was a low. It was broken. First, it tapped into a zone of interest, and this zone is a kind of supply zone. Tap into the zone. So just notice that, okay, it has tapped into that zone, and then it has lost momentum. Broke out again. So after this breakout, we can wait for further confirmations, right? Yes, but just in case we do not wait for confirmation after this breakout. Okay, confirmation was like what? So first of all, it has tapped into the zone. So this is a breakout we are looking for. So this is a breakout, indicate change of momentum, at least maybe a kind of retracement or kind of trend continuation. So now mark our zone. This leg, what leg fueled this breakout? See this breakout. So this breakout now generated from this consolidated area here with this green candle. So now see market retested it. So now if we have taken this entry at this point, it would have been successful. Risk entry, SL at this high, yes, because this was the other high that was from. So see now this one, tap the supply zone, but there was no breakout. So now we can target, where are we targeting? See, 1:3 is good oh, but we are targeting something more. So maybe we can target here, but now you trade this in accordance with the overall trend. Maybe our daily analysis is telling us that this is a retracement. If our daily or weekly analysis is telling us that okay, market has broken out from a major trend and this is a retracement, that means we'll just try to catch few pips. So we'll not even try to catch this leg, rather we can look for a good resistance, okay, good support or resistance that was broken. So you see this place, all of this place, they are resistance that was broken. So now I can mark this. The chart is becoming more dirty now. This resistance, I can mark this here. This other resistance, I can mark this here. See, I can mark this here. If I want to get more pips, I can mark this. I can even mark this here at this point. But then this is retracement. So maybe this is a kind of, this is an order block. This place is an order block. So maybe I mark this point. So maybe I put my TP at this point. So you see, this is a 4 arrow. So now this trade now went well. This is 4 arrow, right? So we still journal it. We journal all the results, right? So when we are done with this now, okay, let's still keep. So now this is retracement. So assuming okay, this order block, it has tapped on this, and using other confirmation like this support, because this was a resistance was broken, it tends to be a support. It has tapped this support now. If I want to maybe take trade in this, so first of all, I will check okay, this support for it to hold this price, is it somehow a kind of key level? I'll check. Okay, see, you can see this is a kind of round number. So you can see I will know that this makes sense. So if market should reject from this point, so maybe I can venture in a trade here for kind of to catch some opportunity. So I'll be looking at this first. This is high, but this high is not the high I'm looking at. Is this high I'm looking at? Why? Because this high is the high that if it should break this high, it invalidates this trend, this selling trend. If it breaks this high now, it's telling me that okay, market want to buy, and it makes sense. But for me now, market has reached this key level. So and I see this push up. So somehow after seeing this engulfing here, I'm still telling you that I can take this trade. You know why? Because this is a kind of demand zone, because this was a demand zone. Okay, first now breakout, a retest. This was a kind of demand zone retest, then a zone, it broke out, a retest, but this was a demand zone, and maybe this one came and retest a little bit, and then it now broke out again. So this is a demand zone. Market now came to it in a key level. That's why I'm taking the trade though. Came to this zone in a key level. So now I can take this trade after this engulfing here. I'll just take it here, and then my SA can be below this key level, or I'll just put it there because I know that market might not likely come to this point. And then my TP will be where? My TP will be this high. Why is it this high? Why is it not at this supply zone? Because I know that this was just a kind of correction. This was a kind of retracement, right? You know, we spoke about retracement. Maybe the overall trend is bullish and this has broken structure in the higher time frame. So we know that this is a reversal. So in this reversal, we know that we can likely break this high. So that is why my TP will be at this high tip. So now this is okay, this is even a 2.49. So I don't like this trade. So or maybe if I want to take this trade, I will refine the SL a little bit. So maybe this lows after this engulfing, refine it to this lows. And okay, now I can take this trade 1:3 according to the rules. So now I can take this trade. So what happened now? After this, market came down and then boom, it pull up. So now if I was waiting for this now, this was where it was broken at this candle. So I can also take the trade at this point at this candle now, but you see this week, but at least it broke this highs. I can, after this it closed, I can take the trade here My SL is low, so this is another opportunity. I can just take it, then boom. So after this now, if you have had broken even, market would have kicked you. So all of these things are things to observe. So but after retesting here, boom, TP now, and then boom, you're good. So we can test on and on like this. So maybe as market came to this point, you saw this run through. This is a kind of liquidity hunt, stop loss hunt. So this is one of, this is a liquidity hunt. So after seeing this now, you now saw this break of structure. Break of structure. Where is our supply zone? This is our supply zone. All of this zone that was consolidating. This one even went well. You would have just taken your cells here. Maybe your SLB. SL will just be between at this point. Why? Because this was a stop loss hunt. It just went up and came down flat. So looking at this it has tested one, two, and it is reading this another this manipulation. The market really want to go down. So after this, I take my trade here, put my SL here, and then my TP now. I can target this point because I still know that the market is trying to retrace. Because see this point now, the market did not tap well. Market came back now and tap on it. So but me, my TP will be in this key level, this one. So this is where my TP is. And then what happened? This is what this 4.9 arrow. So I'll just put it at 5 arrow. And so we are compiling our trade record. So we took this trade, we took this trade, we took this trade. This is 4 arrow. So in all of these trades we have taken, what how many loss have we gotten? Only one loss. And the loss from was it from here now? This one did not activate us. Was the loss from, okay, the loss was from, okay, this one did not activate us. Yes, we took a loss. Okay, yes, the loss was from here. We saw this market here. Our SL was here. And then it kicked us before running our direction. So this was the loss we took. So now from all of this now, when you now backtest all of this, so this is March. You now do the same thing. So looking at this one now, this is a zone. This is a zone. So market broke out from this zone. So this is my zone of interest to buy. My demand zone, all of this zone like this now, this zone. Market like this. So now you see market tapped into the zone. If I was waiting for here now, I would have not entered again. So that's why I say I have two entries. Risk confirmation. So if I wanted to enter this trade for maybe a kind of confirmation entry, I would have entered this now. So maybe after this breakout, after market came down to this point and I saw this pin bar. Remember we had pin bar and engulfing. So this pin bar one for me sef, I'm taking this trade from here and my SL at this low. After or taking this trade after here, after this, because this is engulfing, telling me that there is trend to push up. Because can you see this resistance, bro? This resistance. Okay, sorry, this is support. This support now, this support. This was resistance that was broken. So it has established, it's ready to push. So seeing this now, I will buy this trade and I will not take it up like this. So I'll just look at my left slightly. So maybe my TP will be at this point. So boom, my TP hit, and a lot of stuff. So with this, so this is the approach. This is the approach. This is the approach. So I know there are many more complexities to these strategies, but note that the purpose of this is for back testing. So now you have your own strategy. What do? You apply it. If your strategy is on 4 hours, you use 4 hours time frame. You're looking for a breakout and retest, you just do the same, and that is, you are good. because you just need to test. So this current market, so looking at this now, your strategy is telling you to wait for breakout. So you can wait for breakout at this zone, breakout, because this market is going to buy, it's going to buy, and or you wait for breakout at this zone to sell. But if this market should break out like this, then where's your supply zone? Okay, where's your demand zone? Sorry, these are your demand zone. To wait for market to retest, but the market might come down, then the wait for market to retest, and then you're looking for a way to buy it up. So this is it, guys. And as well, after getting all of our data, what are we doing? We are getting this evaluation. First, we are getting to know the win rate of this strategy, the average risk to reward, and the edge consistency. So now in this, we know that this edge, it will work, we will get good. Okay, we know that first of all that it has high win rate, because in all of those trades we took, it was one that hit SL, that hit stop loss, and yes, it was one that hit stop loss. And if we had waited for confirmation entry, it wouldn't have hit stop loss. So that is it. And as well, we had confirmation entry. With confirmation entry, it would have given us a good risk to reward, and as well would have taken more trade. So now, after doing all of this, you can now say, okay, now you want to use confirmation entry, and you do the testing again. That is, you are refining your edge. Your edge is your victory. Your edge is your stronghold. Your edge is everything, because if you're a trader, you say you're trading, your edge is everything. I'm telling you the truth. So please make sure you are paying attention to your edge. So okay, this is what I mean, like all of those times. So like now, you see this, you're seeing that this is a momentum. Remember that time that I said that, okay, because of this breakout, we know that this is a retracement. So we know that this is a retracement because of this strong momentum. So we're not trying to catch it back down. Because why? This was a low, this was a higher low, a higher low. Okay, first this was not form. Okay, yeah, this was a higher low, and then is it this one that will bring it down? So we just need to just maintain our steez here. Then boom. So hope you found value in this video. Do well to destroy this like button, destroy the subscribe, and then drop your comment and your observation on this particular backtesting video in the comment section. I'll be right there waiting for you. And please do note that backtesting is let's say, I wanted to say is everything. Yes, permit me to say that backtesting is everything. Yes, backtesting is everything, because if you are a trader, you end up killing yourself with psychology and be losing. You go and learn psychology, you come back and you don't have a good edge, you will lose. You go and learn psychology, and you have ended up not solving any problem. But if you can define your edge, systematize the approach in such a way that it is repeatable, right? It is not too complex, it is just repeatable. You can apply the system and it is still the same thing you're watching out for, then you are good to go. And then other variables make sense to you. Alright, so thank you very much. Hope you have subscribed though. Hope you have smashed the like button. Oh. Do well to do that, and we'll see in the next video. Yeah, thank you very much.